Welcome to the Chrisman Commentary, daily mortgage news podcast. I'm your host, Robbie Chrisman. Topics on today's episode include where borrowers are getting qualified, my interview with TRUE's Steve Butler on the next evolution of background AI and mortgage tech, and in the capital markets, there's a lot of news without much change in rates. Thank you to TRUE and its Mortgage Operations Service, or MOS platform, which transforms borrower documents into instant, trustworthy data for real-time decisioning. TRUE cuts time to critical loan events from days to minutes by using background AI workers to instantly validate data and automate underwriting decisions. There's a difference in denial rates state by state for a variety of reasons. Best or easiest, most qualified borrowers, states to buy in, according to a study by the National Association of Realtors, are Alaska, North Dakota, and Nebraska, which all have drastically low denial rates. The toughest are actually a trio of southern states: Mississippi, which rejected 19% of all 2023 mortgage applications, Louisiana, which rejected 18%, and West Virginia at 15%. Maybe some of that will change if rates ease, but as markets await this week's Federal Open Market Committee meeting, we, and that includes the Fed, are all navigating a complex web of inflation dynamics, policy uncertainty, and geopolitical shocks. Despite the Federal Reserve signaling a continued hold on rates, Chair Powell is under pressure to provide clarity on what might ultimately prompt a shift in monetary policy. President Trump's renewed push for tariffs, coupled with tighter immigration proposals, has heightened expectations of upward inflation pressure, even as recent data shows core inflation moderating. However, with economic growth stable and the labor market only gradually cooling, markets now anticipate no rate cuts before September. Investors will be watching for updated economic projections from the Fed, the first since Trump's Liberation Day tariff proposals, to gauge how policymakers interpret the evolving trade and inflation landscape. For today's interview, I wanted to welcome back to the show TRUE's Steve Butler to talk about the next evolution of background AI and mortgage tech. From cutting decision times to minutes, enabling instant pre-approvals, exposing the hidden costs of partial AI solutions, and what's ahead in reshaping the future of lending. He's President and Chief Revenue Officer at TRUE, working directly with executive management on the organization's business strategy, and is responsible for all aspects of the firm's revenue generation team. From sales to marketing, partnerships, business development, and customer success, Steve's tech seller approach and customer-centric vision are critical to TRUE's continued expansion into the lending industry.
The last time we spoke, you had covered the notion of background AI. And I'm kind of wondering the next evolution of that concept in terms of business impact. I will add that it's an interesting time. I saw an article this morning about Meta and Mark Zuckerberg poaching a bunch of AI engineers from other places in Silicon Valley to make kind of this new concept of general AI. Maybe we'll get to the point here shortly where it does surpass human intelligence on some level. But when it comes to background AI, can you speak to that concept, then how you think it'll impact the mortgage industry?
Yeah, no, it's a great question, Robbie. What I think we've all learned over the last several years is that AI in general is really you gotta decide whether it's up to the task you give it in terms of how much of an ROI, how much of a lift you really get from it. I mean, today if you use ChatGPT, I mean, no one is sort of taking the output and just sending it to the professor for their paper, right? Or a lawyer's not sending it to the court, as a legal brief. I mean, it's got to be modified. It's got to be probably rewritten in some cases, and you got to finish it the rest of the way. So you really ask yourself, are you really getting the lift, right? And it comes to mortgage in particular, we're talking about probably the most complex, financial process there is end to end. And so I think AI looks at that and says, wow, where do I fit? What can I really do? And unfortunately, in this industry, anytime we've introduced technology over the last 20 years, it's always fallen short because of the amount of burden that the users have to sort of learn a new tool and stay updated on it. In fact, in some cases, they actually have bigger teams because they have to have specialists on this new tool, this new application. So I don't want to do that with AI. I want AI to go in as a full lift, full gain. And the only way that's going to happen, Robbie, is if you can break up the process into these bite-sized stages that can be fully handled 100% by AI. When that happens, I call that a background worker. You trust the worker to do that task. You don't have to coach it. You don't have to correct its work. When it's done, the output goes to the next stage. When that happens, you have a full lift, and that is very doable today. I mean, it's really a page out of product manufacturing, physical product manufacturing, where that's how they do it, stage by stage, and they break the stages up based on if it can be automated or not. And that's what we want to do in mortgage, I think.
Well, it's certainly reduced kind of the time to decision from days to minutes, which is very helpful in the mortgage origination process. Pre-approvals now are taking less than an hour. I want to know kind of on the back end, take us inside the sausage factory, if you will. What's changed to make that possible?
Well, part of it is manufacturing alone is become more closer to what, you want to get closer to physical product manufacturing. You want to start thinking about how you divide up the process. I mean, up to now, over the last many years, mortgage manufacturing has been divided up based on expertise, maybe based on functional groups you have inside your business and your lender, your operations, and not looking through the lens, well, let's break it up whether or not we can automate that completely. And so I think that first of all, it's just process has gotten better to make that possible, right? And then the technology itself, once you've broken, it's really kind of nice to see. Once you've broken it up into, let's just say, document indexing, right? It's something that every lender has to do because you've got tons of documents coming in from the point of sale, and they got to be figured out what they are. They got to be accounted for. They got to be labeled, and they got to put into the right place in the LOI. So indexing is a burden, a manual burden on the organization. Let's just call that a stage. And so now let's train the AI to the point where it can handle that stage fully. And what I found here at True is, we support today about 1,000 different document classes, and an originator, a large originator that we work with, for them to cover all their products across all 50 states, you got to be able to understand and index about 500 unique documents. And so we have it fully covered, but that's when the AI could just take that on, and humans don't have to worry about it anymore. They just go on to the next stage. So those things have gotten better, smarter and smarter AI, but it's really purpose-built AI, almost like a personal AI for that specific stage.
I like that you say humans don't have to worry about it anymore, because it seemed like if companies were adding AI as part of their process, it still required human oversight in the past, which some would argue, how does that actually increase efficiency if you're adding a layer to the process or a step to the process? It sounds like True has helped eliminate some of that, those areas that still require human setup or oversight. Can you talk about how you've been able to accomplish that, and then also kind of the
Yeah.
hidden cost of these partial AI solutions that aren't quite as advanced as they could be, that I alluded to there?
Yeah. Well, as soon as you come to terms with the fact that AI can't do all things, and you can't even train it to do all things, because if you decide that's your path, that's kind of like a boil the ocean kind of solution. So maybe a couple of years from now, you might have an AI, solution that can handle that. So if you come to terms with the fact that you've got to really find places where you can inject it and then train it to basically handle that, that's the first big thing that we did. But our solution is we've got multiple models. We use a lot of LLMs now, large language models today, in addition to the machine learning that we've built up over 10 years, running millions of loans. I mean, 4 out of the 6 mortgage insurance players use True. So we see all the loans in this country, right? And they run through our platform. So the platform gets smarter and smarter as a result. So the combination, I think we're the only ones in the industry have combined large language models and this machine learning that we've got together to create a solution. Everybody else, Robbie, sends it to India pretty much. It's almost universally sent to India for human review, and they correct things and then they send it back. As soon as you do that, you've sort of taken the opportunity for having, a scalable solution for one, and second, to have sort of a real time kind of approach. I mean, imagine a borrower sends in their documents, and now you want to give them a pre-approval maybe on the spot. Well, you could do that if you have a machine-only solution, but you can't do that if you're sending it overseas and coming back. So I think there's a cost, there's a real cost in that. You pay for that, but also, and there's some risk when you send PI information over, data, private data overseas. But also there's the cost of lost opportunity to provide borrower experiences that's just so much better. I really truly believe that not too far in the distance, months, we're going to see the yellow on the phone with the borrower saying, basically, upload your these 5, 6 documents. And in that same conversation, he said, you're pre-approved. We've got your income, we've got your assets, we've got everything. All we need to do is make sure you have a clear title and a good appraisal. And that, I think we're not far from that. And I think it's all because you can have a real-time solution when you make it all machine-based rather than human-based.
Yeah, and I like that you brought up the overseas thing. There was another article I read about how these companies were receiving multi-billion-dollar valuations touting AI, but actually they were just having a bunch of background workers overseas do things. So that speaks to companies properly vetting their AI partners for sure. I also like that you brought up boiling the ocean. That's a term you've used with me
Yeah.
before. I don't think we're at the point where anybody should be trying to boil the ocean with AI. Target specific areas of your process that can be improved, and AI can certainly help there versus being kind of a one size fits all or overarching solution. So bunch of good stuff there. I think that it speaks also to kind of misconceptions that lenders may still have about AI in mortgage, thinking maybe it can do more than it can actually do. In some cases, maybe companies are evolving so fast, and I think True's one of those where it's like, hey, you don't even realize all the capabilities that
Yeah.
we have here. But I want to ask from your perspective, your thoughts on misconceptions currently, and then kind of your advice to teams looking to move faster in the space.
Yeah, they definitely are misconceptions, I think, on two ends of the spectrum. And one of is the fact that, you know, um, is this just the next shiny jewel? I mean, you see this in the C-suite now for a lot of lenders who have been investing, for decades in technology, and what they've got is hundreds of dollars per loan they're paying out, and yet their costs, their operational costs keep going up. And they're saying, is this just the next thing that's going to do that? It's going to be another cost. So they're on the sidelines questioning whether there's an ROI here, questioning where to get started and all of that. And the other end of the spectrum is that they can do everything, and it can do so much more, so much. We have such a labor intensive process. AI is going to do that and assist that. And what I'm finding is that, it's just the way you use ChatGPT and any of these other tools inside your enterprise. We use it here at True for various things, marketing, to write marketing content, etc. But the reality is, you still got to put a bunch of time to finish the job, right? You got to finish the job. So I think that those misconceptions exist. You got to borrow a page. I really think it's important. Borrow a page out of the way. Products are manufactured, physical products, and they take a practical approach. They're constantly trying to optimize their process, but their process is broken out based on what can be automated, and that's what they look at. And so if we can automate that, that becomes a stage. And let's give it, in the case of a physical product, they've given it a robot, or AI-driven robot to go work on that stage. In our case, you can give it an AI solution like True has, and it can take on the stage of indexing, or the stage of extraction, or the stage of income analysis, or asset. Those are all distinct stages that can be automated today. And so I just think we've just got to get a whole lot smarter about what manufacturing really means. I'll tell you another thing, Robbie, which is frustrating when I look at the way mortgages get manufactured. I know we say we're manufacturing mortgages, but let me tell you, I don't know if I would use the word manufacturing yet. And the reason for that is this is a back and forth process. Manufacturing mortgages mean you get to stage 5, you say, oh, underwriting opens the file and says, oh my gosh, we're missing some data, or there's some inconsistency across the documents. The borrower name is different on this document versus this document. Close the file, send it all the way back to the loan officer. They start working on it again with the borrower, and that way it goes. And then there's a new QC workflow that kicks off, and that's the way it goes. And it's a back and forth. Most manufacturing is always downhill. You just go to stage to stage to stage, and I think we need to get really smart about how that works, and to figure out how to go downhill in mortgage manufacturing instead of this back and forth.
That's a great point. I think AI might be there for some of these very vanilla, conventional conforming underwrites, but it always is going to take a certain degree of hand holding with borrowers for more complex files. And I don't think that that's going to go away. And that speaks to why companies need relationship management. You need good salespeople and those sorts of things. Let me close with this today with you. What are you most excited about for True in the next 6 to 12 months? As I say often on this podcast, things are evolving so rapidly, and AI is taking such large leaps forward. When you look at True over the next half year or year, any new product milestones or strategic decisions that you can share with listeners?
Yeah, Robbie, what I'm really excited about, we're involved right now in several projects that are going to be producing breakthroughs in the time to approve loans, time to close loans. It's the things that I'm just been talking about, being able to do real-time data quality, where the documents come in and, within minutes you've got the quality cross-validated across the entire loan, and then decisioning can start right then. Your decisioning about whether you can approve the loan, close the loan, et cetera, are going to start right based on that part. So this idea of really collapsing the the whole process, and the borrower is going to be so delighted. We're all working for the borrower, really, in a lot of ways, but the borrower's going to be so delighted because the borrower is going to get the feedback that they kind of get today when they use an app like an Uber, for example. I mean, they're getting instantaneous feedback where the car, they can connect, contact the driver, and all of that information is just, that's where mortgage is going, that highly interactive, near real-time solution, very transparent. That's the stuff that we're working with on a number of big lenders. And of course, we've got, some partners that are part of this as well, and we'll be announcing those over the next, couple of months, those partnerships that bring all this together into this great platform that I think I think we're going to see some game-changing kind of things happening over the next several months. And I think True is a big part of that, which is really exciting for me.
Definitely exciting. And I'm very excited too at all these game-changing innovations. It's just going to make the mortgage process that much more enjoyable for those that work in the industry and for borrowers looking for loans. Good stuff all around. Steve, always a pleasure speaking with you. I look forward to our next discussion, whenever that might be. But this was great today. So thank you very much.
You bet, Robbie. Thanks for having me on.
Recent economic indicators have offered some measure of relief. Consumer prices in May rose just 0.1%, while core goods prices, expected to be the most sensitive to tariffs, actually declined 0.4%. Services inflation also eased, and producer prices underperformed forecasts, suggesting a weakening in firms' pricing power as consumers tighten their wallets. These trends point toward continued progress on the Fed's preferred inflation measure, the PCE deflator. Encouragingly, sentiment data improved alongside the soft inflation prints. The NFIB Small Business Optimism Index rebounded, and the University of Michigan's Consumer Sentiment Index saw a sizable increase. Still, questions linger. Many firms are expected to pass along more tariff-related costs once existing inventory runs out, meaning the inflation battle may not be over. For now, however, stable labor market data and subdued price pressure supports the Fed's cautious stance. Meanwhile, financial markets displayed resilience in the face of escalating geopolitical tensions last week. Following Israel's overnight strike on Iran, traditional safe haven assets like gold rose and stocks dipped, but there was no broad flight to safety. Instead, the market followed a now familiar pattern. Initial shocks followed by bargain hunting and recovery. The S&P 500 remains near record highs, helped by easing inflation data and better than expected sentiment readings. Deeper structural concerns persist, however. Initial jobless claims have ticked up, with continuing claims reaching levels not seen since late 2021, potentially signaling labor market softening. At the same time, governments are paying the highest yields in decades to borrow long-term, reflecting growing investor demands for inflation compensation amid deficit concerns and central bank caution. While short-term sentiment has improved, the longer-term outlook remains clouded by volatile trade policy, persistent fiscal pressures, and shifting global power dynamics. This week's calendar highlight is the monetary policy decision from the Federal Open Market Committee on Wednesday, which will include an updated dot plot along with the usual statement and press conference with Chair Powell. Internationally, there will be central bank decisions from Japan, Chile, Brazil, Sweden, England, Switzerland, and more. Only the Riksbank and the Swiss National Bank are expected to cut rates by 25 basis points, with the rest unchanged. Events of interest on the domestic calendar include import and export prices, retail sales, industrial production, capacity utilization, business inventories, home builder sentiment, housing starts and permits, and leading indicators. Today brings a very light calendar consisting of just the New York Fed Manufacturing Index for June and several Treasury auctions that will be headlined by $13 billion of reopened 20-year bonds. We begin the week with agency MBS prices roughly unchanged from Friday's close, the 2-year yielding 3.97 and the 10-year yielding 4.44 after closing last week at 4.42%, down 9 basis points over the course of the week. Let's wrap up with a joke and some housekeeping. While doing a crossword puzzle, the Cyclops asked his wife, "How do you spell Hawaii?" She replied, "You need 2 eyes." The Cyclops growled, "My life is just a big joke to you, isn't it?" Thanks again to TRUE and its mortgage operations service, AI Background Worker, which transforms borrower documents into instant, trustworthy data for real-time decisioning. TRUE cuts time to critical loan events from days to minutes by using background AI workers to instantly validate data and automate underwriting decisions.